to the Forex trading strategy session brought to you by Traders Way. My name is Wayne McDonald. I'm the Chief FX Market Strategist. Today is Monday, the 26th of January, 2015. We'd like to plan out our trading week. Let's review the Commitment of Traders report so that we know all the large non-hedging positions in the marketplace. Let's also go through the calendar and find out the big events for trading and for risk. Let's play it smart, huh? All right, good luck, people. Let's plan out our week. Might as well start with Commitment of Traders report. Again, these are non-hedging positions by large speculators. Think of them as hedge funds. Yeah, I know, hedge funds, but they're not hedging positions, but hedge funds don't really hedge, blah, 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 blah. But anyways, these are not people that are hedging. All right, they're in it for the money. These are positions. It's not opinion. It's actually money in the market. Okay. Now, full disclosure, this data is a little old. Doesn't mean you can't use it. It's the most recent new information available by the CFTC, Commodities Futures Trading Commission. So these positions are as of Tuesday of last week. And the positions are reported late on Friday basically at the market close. So it's still relevant to us. Okay, so let me get my drawing tool. This is the euro in terms of dollar, so euro USD. What we're looking at is the black line. This is the net position. So you add up everybody everybody short plus everybody long, and the net result. This is the water line. So the market is net short, and week over week, you can see that not only are we still net short, but the market is more net short, the euro versus the USD, than it was the previous week. Okay, is anybody buying? No, not really. And more short positions were added. So in every which way but loose, the market is short and more short and still short, etc., etc. Okay, British pound. Wasn't that long ago that the market was net long. Then in the fourth quarter of last year, the market was neutral, not long, not short. And here we are today. The market is net short and dramatically adding to their short positions for the British pound. Okay? I should actually clarify, okay? The number of short positions are just slightly higher. There's just significantly less people long. That's interesting, isn't it? People are giving up on the Bank of England. Now, I think the most important thing that happened last week in regards to the Bank of England is that two of their voting members changed their opinion as far as wanting to raise interest rates. And I think that pushed a lot of people out. Okay, fundamentally, that's very important. And now you see it as far as positions of large traders. Okay, so the British pound, same amount of short positions, just less people trying to push it north. So we're more net short than we used to be. This is the Japanese yen. Remember that one? Okay. Nobody's longing it. A lot less people shorting the Japanese yen. Again, less people longing. By longing, that means shorting USD yen. Okay, because you would be buying Japanese yen, right? That's what long position is. So less people are buying Japanese yen, but according to the statistics, a lot less people are shorting the Japanese yen. Therefore, the net result, okay, let's take a look at these other lines here. The net result is that there's net less people short, but also this red line is price. And you can see prices come down from 19, 18 down to 17. And it's just because there's people are waiting to short it again, is the way that I read it. Okay? Nobody's buying, there's just less people short. So people are waiting and waiting and waiting to buy USD Japanese yen. Okay? And you can see that by the positions. If people were selling USD yen, then this gray line would be up. It hasn't changed. Wyatt is saying, well, what are we waiting for? Well, there's the $1 million question, right? Well, how about repatriation flows, for example? How about retracement to key support? Positive inflation data. Maybe people were waiting for QE to be announced. See, here's the logic, right? QE in Europe gets announced. They stabilize their economy, and imports to Germany and the rest of the European Union start to increase from the Asian region. Okay, so it could be a long time? No, because the market's forward looking, okay? So really what we want to see is some action. So we got the action, so maybe that allows for a little more risk on, okay? But my advice has been the same for many weeks now. If you want to be short the Japanese yen by longing a Japanese yen pair, consider it when you're at hardcore solid support that even a blind man can see. And then maybe use a binary option to hedge when you long it, because technically most of those pairs have been technically short, even though fundamentally we want to be long. So therefore, use a binary option to hedge and reduce your risk by about 40%. Okay, that's how you long a fundamentally bullish trend, even though it might be technically bearish. Okay, watch some of the past videos. I've covered it many times. All right, I'm gonna skip this WSI. I just can't look at it. All right, here we are, Aussie dollar. Again, according to the Commodities Futures Trading Commission, we can see that there's less people short, less people long. What? Indecision, huh? What did I say last week and the week before my target was for the USD Japanese yen? Or sorry, the Aussie versus USD. 75. Okay. A week ago we were at 82 and a half, let's just say 82. Right now we're at 79. So I don't have any indecision whatsoever, but I suppose that's my job. The market's not so sure, however. Okay. One thing that occurred last week that might have muddied these waters was a good, or let's say better than expected Chinese GDP. So on the short term, that props up the Aussie dollar. But what I said is don't worry about that. One data point does not make a trend. And that Governor Stevens at the Reserve Bank of Australia says it's worth 75. So even though, as you can see here, it's at 82 and a quarter, even though it's at 82 and a quarter, stay on mission. 75 is the plan. So you got to stand for something or fall for anything, even a one-off, mediocre GDP out of China. Stay on mission. Well, it's 300 pips ago. All right, let's move on to the next. Kiwi. Kiwi. Neutral. Very interesting. Check that out. A few more longs, a few more shorts. So volume's picking up. Check that out. Stable, 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 stable. Okay. Now, as we know, we have, let's say risk off global macroeconomics right now. So this price would continue basically to head down. But right here, nothing dramatic. Okay. The trend is going to continue, but there's nothing dramatic. The news to use here is that volume is picking up. There is more interest in the Kiwi dollar, but it's offset. Longs are offset by the shorts, so the market's essentially neutral. Bulls or bears are battling out. So make sure you know what team you're on. If you don't know what team you're on, don't trade it. Okay. What I'd like to see is the Japanese yen start to weaken. What I'd like to see is a decrease in dollar shorts, because I would like to be long a carry. Eventually, I'd like to see New Zealand dollar, Japanese yen. Excuse me. Okay. I'd like to be long that because it's a true carry trade. The interest rate differential is good. The fundamentals make sense. Kiwi is independent a lot more from China and the rest of the world than Australia is. So they're stable. We need the yens to weaken and get a nice carry. So what I need to see here is, right, a change in buying patterns. I don't necessarily need the market to go, more bullish. I just need less bears. And I want the Kiwi Japanese yen to just slowly, slowly, slowly go up. A sleeper. No one will even notice it. But I'd like to collect the interest 7 days a week. Okay. Kitty cat. Okay. Devista wants information on the ruble. This information is reported by the U.S. government as far as large institutional investors reporting their large positions. There's no ruble. Okay. All right. And this is kitty CAD. We've had a dramatic move in CAD recently. We tickled the 125 target we had, I think, early last week. That's up several hundred pips. What we're looking at here is, short positions have increased. Okay. Long positions decreased significantly. So the market is much more short the Canadian dollar. Okay. Some people are shorting, most bulls are being squeezed out. So it's becoming more and more of a one-way street. Interesting, isn't it? Why did the currency move the way that it moved? Well, bulls are getting up. But the market's not going crazy selling the Canadian dollar. There's just less bulls. I mean, there are more bears, but it's the bigger story is there's significantly less people buying the Canadian dollar. Okay. Let's go through our week, and then we'll do some technical analysis. What do you think? Smell like a plan? Let's do triple stars. How do you say that in Korean? Isn't it Samsung? 3-star? Isn't it? No, I think it is. Something like that. Yeah, okay, good. Oh, good. You know, my Korean's a little rusty. I love Korea, though. Seoul's a nice town. All right. So we got to pick and choose. Okay. Just eyeballing it right away. You see any currencies that you like to trade? How about UK GDP? Could be a rabbit, could be. Okay. Aussie business confidence. Okay. That could be a good one. Okay. That could be a good one. Just a quick little scalp. If you want the Aussie dollar to go down to 75, then you're going to hope for a bad number. Sorry, Aussies. So again, what I would do is I would look for resistance, short, jam a stop, take a walk. Okay. Then we got GDP. Okay. Yeah, I don't think it'll be a big market mover. It's not, you know, a couple of things. You look at this and it's preliminary GDP, so it's only preliminary, so who cares, right? And then by the time hardcore GDP comes out, it's so backward looking that nobody cares. But there probably could be a scalp in there, right? Trend is down. Maybe I can get an opportunity to sell at resistance, jam a stop, take a walk, let the news come out. The market will be disappointed. This thing drops. And I already took my risk off before the event. Durable goods. You know, this one's becoming more and more important. For a while there, it wasn't important. All we cared about was the real estate market rebounding. So now we got the real estate market rebounded and stable. So now we need to go back and see if people are spending money on those houses they were buying. New stainless steel fridges and stuff, right? Okay, so that could be interesting. I think it'll become more and more of an opportunity as time goes by. Keep your eyes on that. Okay, you'll notice that we got a negative number last time. This time we're expecting a positive number. I think we could be disappointed on that one, right? All right, new home sales. Yeah, you know, again, we got the trend going there. I think people know what to expect, and even though that a year ago or so that was a big important number, I don't think it matters that much anymore. For now, I mean, we got the trend in place, so it's very unlikely to have a number off trend. So I think it's all priced in. We got it good. So I think your bigger trade would be off of, you know, a core durable goods orders. Okay. Okay. CPI, that's important. Okay. In particular, it's important because we're wondering if the Reserve Bank of Australia needs to change their policy. Right now, they're bearish. Right? Interest rates at an all-time low. Can they go lower? Is there a need for them to go lower? Well, you know, a bad CPI would hint towards that. So again, if we have a disappointing CPI number out of Australia, then yes, 75, here we come. Okay. And then what? FOMC. You think that's going to be important? Yeah, probably, right? So the FOMC statement, we're looking for slight changes to their statement. There's no policy change per se, but we want to know when they're going to raise interest rates. Is it this year? Is it next year? Um, you know, well, let's see what they think. They're going to tell us. You know, the impact on the euro, you know, the euro quantitative easing and all these different things might start to play out. I wouldn't say we've had strong data for raising interest rates, have you? Yeah, you know, so it's the statement change and then the, you know, the press conference and all that kind of stuff, the discussion. It's all going to be important, but you know, what's likely to happen? Well, we haven't had strong data recently, so I don't think they're going to come out guns blazing. Remember, central bankers don't like to change policy. It's risky, it's dangerous. Okay, so they're going to want to see the outside influences on inflation. So, for example, is the Fed more eager than a few months ago to raise interest rates now that oil prices have dropped 70%? How does falling oil prices impact inflation? Well, dramatically. In fact, core inflation is higher, right, than headline inflation, which is very, very odd. I don't know, contango, backwardation, I don't know what you call it. It's weird. Okay, it's very unusual to have higher core than headline inflation. So the Fed's going to need to discuss that. And of course, they don't use, you know, CPI as much as they use PCE. So, you know, how do things play out in the short term? I think messy. But I don't know. I went shopping over the weekend, and it seemed like people were spending money in my neighborhood. Um, and I'm wondering if it's because you can fill up your SUV for 40 bucks. It used to be 80 bucks, right? So are they spending the money in the economy? Well, the economist in me is always asking that question. The answer kind of looks like it is. So when does that trickle out into um, a higher core? When does that trickle down to higher retail sales? Well, it's tricky with the retail sales one because a lot of retail sales is impacted by, um, purchases at the pump. So I don't know. So when does it start trickling out into the real economy? Well, I don't know. We'll see. That's what we're watching. But is it going to be in this FOMC meeting where they're like, we just have to raise interest rates sooner than we thought? No, probably not. Also, they want the outside influences like Europe to start kicking in, right? So I think once Europe gets going and we start to see a stabilization in their economy and inflation at least not falling, right? And maybe China starting to feel the positive impact of Europe coming back into the global economy. And we start to see factory orders and industrial production numbers and stuff like that in China improving, then we're going to see like over the next year to 2 years a sea change of just slowly going from negative information to neutral information to slightly positive. And when we get to more neutral to positive globally, I mean, Europe stabilized, China data improving, Australia's economy improving because of China, and China improving because of Europe. Okay, 1, 2, 3, they're all interconnected. Then the Fed will say, look, our economy is doing fine. Outside influences, seem to be improving. So it would be prudent for us to start dealing with inflation. But I don't think doing it with Europe still at the brink of collapse. you know, I don't think it would be prudent now. And so I think we're going to get all of this, right? We're going to get all this. And so it still tells me that, we're not going to raise interest rates in 2015. Right? So we'll see. Data dependent. Well, the data isn't pointing to high interest rates, in my humble opinion. Okay? How about follow that up by the Kiwi interest rates? Boom. All right? So Kiwi could be nice. See, these central banks, they produce the trends for us as currency traders. Yesterday, busy, early yesterday, last week, very busy. Right? We had Bank of England, Bank of Japan, Bank of Canada. We had the ECB. Now this week, the Fed and the RBN. Very nice, very nice. Number one trader in my whole village. All right. German CPI, it's not going to be good. Don't worry about it. Weekly unemployment claims, we're on trend. I wouldn't worry about it. How about Japanese inflation? Hoo-ha! Yeah, that could be a good one. Put that on your radar. Good day to trade the Asian session. Wyatt asks, does the market still move when interest rates stay the same, or the decisions stay the same? Well, we know what the decisions are going to be 99% of the time. It's what they're thinking that's important, Wyatt. The question is when? When? When do they lower? When do they raise? When? And then the market wants to front run that. So anyways, Japanese yen inflation data. Yeah, looks good to me. Okay, Aussie PPI. You know, PPI and then CPI, right? CPI is not going to be good. They're even expecting a bad number, negative number, which is just not good in any particular way, right? PPI, I'm wondering if we're going to, if PPI would confirm falling like iron ore prices and stuff like that. But these numbers are not likely to be good. Okay, you're just barely 1% year over year. If that drops below 1%, you know, again, Aussie dollar's on its way to 75. I would look to help it, okay? And what about CPI? What if it comes out -1 versus -2? Who cares? It's negative. Okay. Canadian GDP on Friday. Who's that rate? Overshadowed by US GDP. Okay. Here's the interesting thing. I think if we get a really nice US GDP, that there's going to be a upside surprise on the Canadian dollar. Well, we've noticed, okay, we noticed as of Tuesday of last week, there's no bulls. There's less bulls for the Canadian dollar. And there's a few more bears, but just more, less bulls. If that makes any sense, right? So where are the bulls going to get back in? Because they were in the market someplace, weren't they? So where do they get back in? And I think that part's going to be the interesting news, right? So, you know, and the reason I say, you know, our US GDP versus Canadian GDP is Canada is by far, you know, Canada's biggest trading partner by far is the United States, obviously, since they share a huge border, right? So, you know, if Uncle Sam is doing well, that's going to benefit Canada in the long run. All right. And it seems like oil prices have stabilized, right? So, you know, maybe a little forward thinking, maybe the bulls are going to start looking for, you know, Canadian dollar support somewhere, which would be USD CAD resistance, maybe it's a psych level 25 and stuff, but you know what? I'm looking at the daily chart, nothing bearish there. I'm looking at the 4-hour chart, nothing bearish there. So be careful. And maybe all this appears at the end of the week. Okay? All right, let's go through some charts. Please let me know what you're interested in having me cover. What currency pairs are you interested in? Let Uncle Wayne help. While you type that in. Oh, hang on. What? Oh, one of my accounts is down. Oh, stupid thing. All right. What do we got here? Wyatt says all. Thank you, Wyatt. Harvey, euro dollar. Sharon, euro dollar, pound dollar. Ron, Aussie yen. Jim, euro. Rick, Kiwi dollar, Aussie dollar. All right. YJ, pound yen. Krakos, euro dollar. Wyatt, pound dollar. Bulgar yen. All right. So let's go. Start here, right? Nowhere like right here. All right. Let's just follow things up with plans from last week. What was the general plan last week? Buy euro dollar? No, of course not. Okay, general plan was this. A little concerned that we didn't get to our target. We've had a significant pullback. Almost too significant. Yeah, so I think I'm going a little bearish to neutral on this. Okay. We've already tickled the 786 on this mini one. So, I don't know. I'm less for the time being. Maybe it has to do with that Fomc. Maybe it's just fallen too far too fast. I'm not interested in being a bull. Okay. But the technical analysis tells me we've had a 786. If we've had a 786, first of all, the downtrend is strong. If we've had a huge retracement, and the 786 predicts a bottom. So this is what the analysis is telling me. It's not my opinion. It's just the fact, Jack. So maybe up and down around. Get rid of this one. Okay, so that's kind of where we are. Let me zoom in a little bit and get a little more recent price action. Okay. Where are the future levels of selling? Well, that's a long way, right? That 15. Hope we don't have to go that far, but you know what? It happens. Next one here, what is that? 1350. Okay. But I'm going to put this down even farther. Okay. Because I don't want it to make a higher high, because if we go all the way up here, then my plan would have to be this. Okay, and I don't necessarily want that. So what I'm hoping is we stay below this area and we do this, just like the price action suggested. We kind of move and consolidate and wait before we break the big scary level of 110. Ooh, so scary, right? And maybe we need to go back to 115 before that happens, right? We go up, we head down, then we head up, and then we head down, consolidate here, and then break. Okay? Maybe. Not ready to predict on a Monday. but maybe later, Gator. Let me move. Let's do pig dog. Go out to the hourly. Okay. Notice how the weekly pivots held just nicely. Okay, this week, here's the weekly central. Okay, price action low, price action low, price action low, and the next one would be weekly 3. So generally speaking, I would take this whole range and like to be short. On this hourly chart, the 55 is in control. That particular bottom, maybe break, retest to 50, and then drop it like it's hot. Okay, got to get through the UK GDP. It's probably what we're waiting for. You got it? Next. Kiwi dollar. Back out to the hour. What do you think? Bullish trend or bearish trend? You are not alone. Do, 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 do. Okay. Drop into the 60-minute. In fact, I'll just do 15-minute just so we can zoom in here. Shorter term price action, you'd be trading it off of this kind of area. It spooked and went a little higher. Okay. This whole area is resistance. On the 15-minute chart, this says it's going to go up for 2 hours. So, you know, maybe a consolidation in this whole area now. But if you're a bear, you're still going to sell high, jam your stop, and let it trend, right? You like to keep your winners short and your winners long? Or your losers long, I mean? Yeah, so, you know, you still need to find the resistance. Jam your stop and let it run. Okay? If you're a bull, you're going to take it the other way. Okay. Oops. Okay. You would sort of line stuff up. You'd see that we're already oversold, so you'd want it to extend even more, and then probably catch one of these if you're a bull. Okay. So the way I play this is if the Kiwi is weak, I would sell Kiwi dollar. If the Kiwi is strong, I would buy Kiwi yen. Okay. So dollar. Okay. Kind of like that. That's how I play it out based on relative strength and fundamentals. Next. Kitty cat. Wait, I don't think anybody asked for kitty cat. Forget about it. It was one of the best trades last week. USD yen. I'll just skip it since nobody asked for it. Ooh, I'm missing a chart. Whale oil B. Must have been doing something interesting. All right. Back it out here. Okay. Looks like we have a couple of plans going here. And we've held at this level. Good. Not the extension that I was hoping for. Right, let's get rid of this. So you can see there was one target up in here, the next target up to the last week's R1. I'd be careful because really tight range, and you see how last week's extreme high and last week's extreme low, and we have an inside week. There's pent-up energy. I hope it's I hope we're going this way. I hope we're going north. Okay. I can't, and remember, hope's not a strategy, but I'm trying to stay patient and drive this up. As long as I don't lose money doing it. So look what happened the week before. Double bottomed, higher high, higher low off of this area. Okay. So we have support. Then in here we have support. And I'm hoping for a break. And I just did a big discussion last week about always taking profit at weekly R2 and weekly S2. The one caveat to that, the one exception to the rule might be on an inside week where I would expect unusually large price action. I'd almost use last week's pivots and say last week our plan was to drive it up here, so that's still our plan this week. So if things go right, the plan from last week and the plan from the week before is the same thing, right? Buy it at 16, target 120, 121. And the way I'm looking at it is we haven't been proven wrong yet. We've been stuck at 17 and 18 for a while, but the plan is still the same. It just instead of happening on a 4-hour chart, it just might be happening on a daily chart. When I move to a daily chart, it's too much information, right? So anyways. Next. Questions about the Japanese yen, I think, right? I think there was an Aussie yen and a pound yen. Well, let's start with pound yen. Okay. This looks like a sell zone. Okay. Central pivot, monthly pivot, right in here. Nice action, right? Low, high, test, lower high, lower low, right? So maybe this is a little 3-wave correction. And the future brings us something like that. That would predict either pound weakness or Japanese strength. And again, that kind of makes sense with GDP coming out for the UK. And I don't think we're going to get a rip awesome GDP, do you? Okay. So another way of doing this is instead of looking at it on a 30-minute, you bust it out even farther. And maybe if you break to the downside, maybe you fib this. Okay. And we below the 50 and we head down. The other way of trading it, if you don't think it's going to break to the downside, then you just plan out your 2 support zones, right? 2 resistance zones, and trade it at the extremes. All right? Stay out of the middle. So you either buy a double bottom or a 1, 2, 3 up, or you sell a 786 or a double top. Okay? So you need to decide. You're a bull or you're a bear. All right? So I do it kind of like this. Bear, sell here. Right? I would actually draw this and put the colors on my charts and stuff like that. Why not? Okay? There's my buy zone. So now you know where the bears are. And then who trades in the yellow zone? If it's not a bull, if it's not a bear, who trades in the yellow zone? Pigs. What happens to pigs? Yeah, pigs get slaughtered. So choose wisely, my friend. Next. Was it Aussie yen? Yeah, I think so. Yep, Ron's asked for Aussie yen. Okay. Let's take her out to a 1 hour. Or yeah, 1 hour wants to drop right here, right now. But it's not playing very well with the moving average. So give it a little more time and have it come down off the 55. The 55 actually predicts a bottom. So, looks like sell it at 94 and out at 92.50, maybe 92. Since the trend is since the trend is down, I would say down to 92. Just a little bit more in the favor of the trend. If it goes higher than that, it'll create some timing issues on that time frame, but you can see previous resistance. So, a lot going on there. Let's go back to the 15. So, yeah, if it doesn't fall here, go up, 3-wave correction, boom, drop it like it's spot up there. And that would be 94.50. So, seems to me 94 to 94.50 is a pretty good resistance area based on price action, based on fibs, based on maybe an Elliott wave. I wouldn't be so bold as to call myself an Elliott wave technician, but there's a lot going on up there. You might want to consider it. And I think we got them all. It's been a long session already. We're well over our time. Hey, have a really good week. I'll be here Tuesday, Wednesday, and Thursday to help you plan out your trading days and give you feedback on what's going on with your trade plans, with your setups, with the technicals, with the fundamentals. Looks like we're going to have another good week as far as the event calendar is concerned. Play it safe out there. If you like these sessions, the best way to keep them going is open up a live account with tradersway.com. They want you to succeed. That's why I'm doing these events with you. Okay? So, will I see you tomorrow? Good. Well, I'll be here on time, ready to go. Peace on earth. May the pips be with you. May your profits be above average. And tomorrow we'll go through commodities and stuff, since we can trade those via tradersway.com. We'll do some gold, we'll do some oil, we can do some equities, maybe throw down some binaries. Awesome, huh? Cheers.